Welcome back to Liberty and Finance. We're always delighted to have this returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us this Tuesday, March 7th, 2023. Andy, thanks for coming back on Liberty and Finance.
Be here. Thanks for having me, Dunnigan. Good to see you.
We're always delighted to have you here, as our guests are, as our viewers are as well. They often ask how long you're going to have till you have Andy back on. We're glad to have you weekly for this weekly market update. We had two topics that came out in the news just in the last week. We wanted to make sure and touch on base with you before we got to viewers' questions that are going to be submitted in the live chat. And sure. So one of them was a news story that broke about a week ago, and that was Blackstone, one of the largest real estate investment companies in the world since the global financial collapse and so on. And together with their other cohorts in the industry, we've been told, depending whose numbers you believe, are sopping up like 25% of all home sales in the last year or two, which has been contributing to driving higher prices, making it difficult for ordinary people like my wife and myself to find a home where we're looking for one, because they get snapped up ahead of us, and sometimes entire neighborhoods do. But they just defaulted on a bond. As we get there right now, I'm going to bring up that story. Hold on one second. And Blackstone defaults on the Nordic mortgage-backed bond. So I'm going to share that part of the screen real quickly so everybody can see that just for a moment, and be right with you guys. But anyway, if you wanted to start any comments you have, because one of the things we've been warned about by several of our financially related guests talking about real assets is that watch out for a rollover in things like, and you have too as well, the three legs of the stool, stocks, bonds, and real estate, all have been struggling mightily. And if you could start us there, and I'll bring up that story meanwhile while you're speaking.
Yeah, I mean, it's obvious, and you're going to start to see a lot more of these. The high inflation and the super aggressive interest rate hikes, from the Fed has created, well, in essence, the largest bond market sell-off in a generation. And falling bond prices means rising rates, and rising rates means trouble with the housing market, certainly. And I think you're going to see a lot more of this. And in fact, if I had to guess, the buzzword over the next year or two is going to be counterparty risk, systemic risk. And everyone is tied together through, whether it be through loans or through insurance on these loans, reinsurance on these loans. And certainly when you see something like this happen, it's frightening because of the systemic nature of it all, where everyone is tied together through derivatives. And the value of derivatives are basically based upon the counterparty's ability to pay. So what does this mean if one entity defaults? What does it mean to the daisy chain of other participants? And I think you're going to see a lot more of this as we go along. And rising interest rates, when you look at mortgages that were set to ARMs, in other words, they readjust after a certain amount of years, and making it much harder for people to service these loans, they start to go upside down on their ability to pay their mortgage, and they default. And all of these mortgages have been bundled up into mortgage-backed securities like those that Blackstone owns. And I think this is just the beginning of many. And it's very frightening as far as I'm concerned, when put in context with the November meeting of the FDIC, who warned us of bank runs, of bank failures, of bail-ins, of being unsecured creditors to this. And you put it together and you see all of these things starting to happen. You look at Credit Suisse, who's watched their share price literally circle the drain to just over $2 a share right now. One of the globally systemic too big to fail banks. You look at BlackRock, and this isn't the first time they've done this. I believe they did something similar to this, or maybe it was Blackstone just a month or two ago. But you're beginning to see the inability to service debt via rising interest rates, and that in and of itself is troubling. But what becomes more troubling is realizing the systemic nature of everything. Everyone is tied together. Everyone has invested with other companies and other institutions, and have based all of their premises upon the ability of these counterparties to perform. And you start to see one fail, like a Blackstone fund or like a Credit Suisse, and what happens to the rest of the system? You go back to 2008, and with Lehman Brothers failing and Bear Stearns, and they talk about bailing out AIG as they were staring into the abyss, that if they didn't bail out AIG because of the systemic nature back in '08, what it would have meant for the entire global financial system. And when you put it into context that in '08, the Fed's balance sheet was 800 billion and now it's 9 trillion, all of it with things like that increase, things like mortgage-backed securities and US treasuries, which were done specifically to suppress interest rates, to push these asset prices up. So the people who are defaulting on their mortgages bought at ultra high valuations. And as rates start to probably more than they can buy, and as they're defaulting, making it much harder to service the debt in this environment, this is going to be the beginning of many. And it's not even the defaults that matter to me as much as it is the daisy chain, the domino effect, the systemic nature of it all. And listening to the FDIC, who says, hey, there's going to be bank runs, there's going to be bank failures. The institutions know this. The people need to know this, but if we let them know, it'll lead to unintended consequences. Well, it won't take many more of these types of events where the people are going to know and be caught up in it very quickly. As it is, I believe Blackstone hasn't been allowing redemptions from several of their ETFs related to these real estate ETFs. They're not even allowing redemption. So this is just a continuing pattern of troubling news related to rising interest rates and what it means to the economy and all of these assets that have been blown sky high unrealistically in an environment where the interest rates have been controlled by the bankers and the public has been showered with money.
I think you've pretty much addressed this question, but if the way that the viewer asked it triggers any additional comments for you, you're welcome. Anthony Shepard says, what is Andy's analysis of Credit Suisse situation as a too big to fail bank and possibly of contagion spreading through the global financial and monetary systems?
That's just it. The acronym is something like GIS, global.
It's GSIB, globally systemically important banks.
There you go. And so they're already telling you that it's a globally systemic, too big to fail important bank. Well, what does it mean? You got the Swiss Bank Corp. I think it was the second biggest bank in the world, bailed out by the Fed recently. And then they fired 9,000 employees. You got Credit Suisse circling the drain. You got Goldman Sachs firing 3,000 people. What does it mean when they start to fail? You saw what it meant in 2008. And the problem being that the leverage that has been put onto the marketplace, into this ecosystem since '08 is arguably 8 or 9-fold what it was back then. When you just look at what the Fed has done by increasing their balance sheet. And when we talk about something as mundane as increasing a balance sheet, that's not what they did. They bought treasuries and mortgage-backed securities to suppress interest rates, to jack asset prices up like this. And they're all tied together. They're all tied together through investments and derivatives. And when one goes, listening to the FDIC, they're telling us there will be bank runs and bank failures and bail-ins. So what does it mean when a bank that is considered too big to fail and a globally too big to fail bank, what does it mean when they have $1 billion pulled out of deposits in the fourth quarter, when their share price has gone from 40, 50 bucks down to under $3? What does it mean? And I think it's just the very beginning. It's not as much as what it means for Credit Suisse, but what does it mean for everybody else that Credit Suisse is tied to? And that's the systemic of all of this. This is the word systemic is the troubling part. And when you go back and remember what they talked about in bailing out AIG, why we had to bail out AIG, because they were insuring all the credit default swaps, reinsuring them. And by reinsuring them, and they were starting to go bankrupt, if they didn't do that, then the reinsurance goes bankrupt. And then all of these contracts they default. They all blow up at once. And maybe that's the beginning of some sort of a reset. And I'm not saying that's the case, but that's exactly how it would happen. It would lead to a daisy chain where things start to blow up because assumptions were made based upon the anticipation of solvency and orderly markets. If that starts to break, all hell breaks loose.
One more example to add to the list of ones that you mentioned was that what Alistair McLeod brought up the last time we interviewed him last week, which was Bank of Japan visibly struggling to defend their latest third retreated line in the sand. First they were at 0% for the Japanese government bond, then at 0.25%, then they had to retreat to 5.5%, and they're still struggling, and it was blowing past that several times and staying there for a significant period of time last week. So he says this is an example when a central bank can't even maintain control of their yield curve, and the
but they shouldn't be able to, is my point. They shouldn't be able to maintain yield curve control because that's artificial. Interest rates should be set by the market, not by the central banks. And that's the problem with all of this. It's illusionary. You know, when the central bank drove down interest rates by buying up over $9 trillion worth of mortgage-backed securities in US treasuries, that's illusionary. It's not right. And to set interest rates at a level that is dictated by a couple of bankers who think this is where it should be is not right. And all it does is, I believe, exacerbate the ramifications when it starts to break. When the market says, no, interest rates should be much higher to buy a currency that is indebted as much as the Bank of Japan is, or the US Fed, you know, interest rates should be markedly higher when factored against inflation. And so this is yield curve control is another way of saying manipulation and holding back Mother Nature. And I think it only makes it much worse when Mother Nature gets a hold of things and the market gets a hold of things. And at some point, that's been my thesis all along, is that when the dollar is globally dumped, and maybe it's because of the loss of the petro standard, interest rates are going to go sky high, so much so that the Fed won't be able to do anything. And, you know, this is when you can talk about the Fed enacting all sorts of draconian policies, like maybe confiscating IRAs and making everyone put them into an annuity of sorts backed by US treasuries. This was a bill that was floated in 2009. Now it got vetoed down. You can Google it and find it. But the idea at the time, and it shows how much the debt has grown, there was 17 trillion in debt and 17 trillion in IRAs. And there was a bill that said, if this happens again, we need to be able to take IRAs and make everyone put the proceeds into treasuries and an annuity of sorts backed by the US government, guaranteed principal and return paid for in US dollars. And all of that 17 trillion infusion into the treasury market would stabilize things. And of course, it got voted down, but it's a very frightening thought when you think about what would happen if the world were to dump dollars and what that would do to interest rates. When the tsunami of inflation hits our shores, interest rates will go to the moon, making these 50 basis point nonsense speculative articles, well, what's he going to do next time, seem like a walk in the park when interest rates go up 10, 12, 15, 18% like that, because the dollars get globally dumped. This is the problem when you suppress Mother Nature, when you break the rules of the game because you have the ability to do so. Yeah, it makes life real great for a while, makes everyone feel wealthy. When their house goes up, their 401k goes up, they can buy a car for 60 months at zero interest rates that they could not otherwise afford and buy a bigger house. And then bang, all of a sudden, interest rates start to spike and skyrocket. And what happens? And, you know, fortunately in this country, a lot of people have 30-year fixed mortgages. You look at a place like Canada, they have 25-year amortized loans that reset every 5 years. So as interest rates go up, what's going to happen in a place like Canada when rates keep going up at every single time, every 5 years, they reset to prevailing rates? This is a problem. This is a global problem. This isn't just here in the US. But yeah, I think a bank like Credit Suisse going down is the beginning of what the Systemic Resolution Advisory Committee was talking about in November. It's scary as hell. And I think everyone who's not familiar with that video needs to go to YouTube and watch it, where the bankers are telling us this is coming. But they weren't telling us, they were telling them, and that leaked out. And, you know, anyways, bottom line is it's a scary thing. And I think it's the beginning of many, many more.
Yeah, you mentioned a couple of things in there I just want to circle back on. One was you mentioned that there was this attempt back in 2009, a bill that was actually in Congress. I remember that was when I believe it was Obama talking about changing to calling it My IRA, Myra, instead of just IRA. And it was a bit chilling to think about that the dots were being connected there by those at the wheels of power saying, look, we see a big hole here, the debt, we see a big plus here. Those are accounts, retirement accounts that are owned by the people. Maybe we could just pay off the debt with those or back it with more credit. And the same, then 2010, the Dodd-Frank Act gets passed, which is supposedly the Consumer Protection and Banking Act, which always means it's the exact opposite. And where they say, government's not going to bail out you next time. You're going to have to get it from your depositors. So there's a lot of concern there. And in the same breath as IRAs, B. Miller says, question for Andy, can a person transfer some of their existing traditional IRA to create a gold IRA?
Of course, it's the company that look, there are lots of custodians, maybe a couple dozen that allow it. The one that I like the best is New Direction Trust Company in Louisville, Colorado, ndtco.com, which is the acronym for New Direction Trust Co.com. And yes, you can roll over or transfer. Rollover is the whole thing, transfers a portion, you move it over tax-free to an IRA, and it's called a precious metals IRA, but it's really an IRA that allows precious metals in it, amongst other things. You could buy stock and bonds, whatever you want, or you can buy metals. And I often talk about the real benefit of owning a precious metals IRA is that you can take possession of the metal if you so desire. Now, it's a taxable event. It's called an in-kind distribution or an in-kind liquidation. Case in point, you buy 50 grand worth of gold and silver, Maple Leafs and Eagles and bars, whatever you want. And then you wake up and say, geez, this is not getting any better. I don't care. I'm under 59 and a half. It's going to cost me a 10% penalty plus income taxes. I'm over 59 and a half. Let's just pay the income tax and let's get our metal. Now, you go and pick it up at most depositories or have it shipped to you. Taxable event, but the ability to actually pull the metal out of the system. And yes, I think it's a good idea. It's never as good of an idea as owning it outside of an IRA, but I think it is a good idea knowing that like that, you can liquidate the IRA or distribute the IRA and take possession of the metal. That's the key feature.
Folks, just remember, if you want help going through that process of rolling over funds from an existing IRA or a 401k for an employer that you're no longer attached to into a physical precious metals IRA, you can call us at the number that you'll see later in the video, 888-81-LIBERTY, and we can help you through that process. Miles Franklin would serve as your broker dealer in that relationship to help either buy, sell, or swap metals underneath your IRA on your behalf. Andy, we've got one more story that broke this week more recently, and that was a possible scandal about the Perth Mint being caught doping or diluting the gold in their 4/9 fine gold bars they were selling to the Shanghai Metals Exchange in China. And more careful reading of this, I had a client actually send me a clip of the article after we had already seen copies of it circulating among the investment community. And one of the questions was, does this affect any gold bars that I would be buying or am going to buy through Miles Franklin, such as 10-ounce Perth Mint gold bars? When I got some information from our operations team on that, I can share that later. But if you had direct reply about what you think the impact or magnitude, because we do a lot of myth busting here as well as breaking of actual scandal. So is this a big deal or a tempest in a teapot, this particular scandal?
Yeah, I think it's not a big deal at all. I mean, look, as far as the Shanghai Gold Exchange was concerned, it was annoying to them that they were buying bars that had more silver in them than they allow. The gold was still 4/9 fine, but it was off by, a few thousandths of a gram or of an ounce rather, 9992 versus 9996 or whatever it was. It was as pure as gold should be, and off by a very, very, very small fraction. Look, you buy a U.S. Gold Eagle, it's an ounce of pure gold plus 1/10 of an ounce of silver alloy. It's not 24 karat. I think when you're talking minuscule deals like this, where they were profiting $600,000 a year, it was stupidity on their behalf. But I don't think it changes anything whatsoever, other than maybe a little a little mud on their face. It was still pure gold, and they should know better. And when they found out, when they were called on it in 2021, they reversed course and they fixed it. But it wasn't the kind of thing that I think should sully their reputation. It was, they were sloppy, and they were putting a little bit more silver in it. It was just a fraction off of what it should be. Well, if an exchange like the Shanghai Gold Exchange, they have standards, and I don't blame them. If that's what the standard is, that's what the standard is. But I don't think it, look, the Perth Mint's gotten beaten up a lot over the last few years. And whether it's right or wrong, that I'll leave that to the people who are investigating that. But, they've been very good to us, and they've always delivered product over the last 3 years in both gold and silver, when the US Mint, who I'm a US Mint authorized reseller for, hasn't been able to do. So I don't have a problem with them, but I will tell you that, in my opinion, this is a little bit more, especially by the title and the headline, more to do than really it should be.
Yeah, one clarification there is that there's the hallmark that they're stamping on the bar, the purity stamp that accompanies that, is 4/9 fine, and that the article even goes out and says that the purity of the gold in these bars never violated that 4/9 standard. So in other words, they were trying to get from closer to 5/9 down to 4/9 so that they could squeeze out that little 1/100% of reduced material costs, but they never violated the 4/9 fineness.
Yeah, they just had too much silver in there, and they have
right.
a deal against it. But again, I think it's kind of not really fair to make a big deal about this to the Perth Mint. I can think of a lot of worse things than having a little bit too much silver and never violating the 4/9 fine hallmark. That to me is not a big deal.
So folks, we'll put a link to that article, both of these articles that we've talked about, in the description of this video. I'd like to get back to viewers' questions. We've got about 15 minutes left here. There was a question about, Andy, and it's always tricky, you've talked to us about the fundamentals of the problems, the risks, the strains, the trend, the global pivot away from the dollar, BRICS, all that stuff. The question is, do you think that there will be a bank holiday or bank disruption in 2023?
Yeah, I think there probably will be. And I think it has a lot to do with the systemic nature of all of these banks tied together. I think there will be. And I don't know if it won't be a nationwide type of deal, but I think there will be a lot of banks that will shut down. And look, if Bear Stearns can go bankrupt, if Lehman Brothers can go bankrupt, if the US Federal Reserve is bailing out the Swiss Bank Corp, one of the biggest banks in the world, and it's not the Swiss National Bank, if Credit Suisse, which is too big to fail, is circling around the drain, and the FDIC Systemic Resolution Advisory Committee tells themselves that it's happening, it's gonna happen, and the banks already know it, yeah, there will be. And I think shame on everyone if they have too much money in a bank. At least don't be lazy and go open multiple bank accounts, and some smaller banks that are not tied to the Banks of America and JP Morgan and Chase and all of these big Citibank, all of these banks that are ultimately too big to fail, but maybe this time they will fail. I don't know. Yeah, I think there will be. I think this will be the year where there will be, the buzzword will be counterparty risk. I really do.
This is not as much a question as a comment, but I think it's a good discussion starter. Great Nate says, getting my haircut Friday for 3 Ben Franklin halves. Can you expand on that, Andy, what that means and what it signifies?
Yeah, well, he's saying he sold, he traded 3 silver $half for his haircut. Let me see if real quick, let me do a little math what that would be worth right now with silver. Let's go 25. That would be worth roughly times 1.5, about $26 that he paid for his haircut for 3 of those coins, because per dollar face value you're at roughly 17. I mean, is that right? I think that's right. Times 0.15. Yeah, $17.87 per dollar face value. So roughly, I mean, that's what you're talking, $18 per dollar face. And, I'm 52. My dad told me that in 1980 in Minnesota, when in the middle of the oil embargo, there were gas stations selling gallons of gas for a silver dime, and silver was near $50 an ounce then. So, do the math at that rate, you're talking almost $34 per dollar face. Divide that by 10, that's $3.40 a gallon. Certainly gas wasn't that high back then, but what it shows is that it's real value. And this goes again into all of these states that are waking up to real money, because that's what's happening here. People are understanding that the dollar is beginning to lose value. And I think it's great that people are waking up to what real money is, not the currency that's in our wallet, but what real money is, gold and silver. And when things get really freaky, I'm not saying we're happy we're going to get there anytime soon. I mean, you could argue we are kind of freaky right now. It's the time that you want to have gold and silver and all of this instability. And when you see cracks with the banks,
Mm-hmm.
insurance companies, I think now is the time more than ever for people to understand exactly what that means. So that's cool that he did that.
Right. And as you say, when you see cracks, I mean, that's why I think why Alistair brought up that point. It wasn't that he was lamenting the loss of government control. I think that he was pointing out that Mother Nature is going to reassert itself. The market is going to reassert itself. And that this was a indication of a breakdown of artificial manipulation that people have been watching and waiting. Like, when is this party really going to be over? There's a question here from Stardust who says, what do you think about credit unions versus banks? The context I'd like to put on that is that every week now I get contacted by, typically it's a husband, wife, later career stage or retired, whatever. They just sold a property, or they're looking at their 401k, or they're looking at some big asset nest egg of theirs, and they just aren't comfortable putting the proceeds of that in the bank. I'm sure you get a lot of those calls as well. Any reason people who are faced with that should have any more or less confidence in a credit union versus a bank in our system?
Well, I like the idea of a credit union. A small credit union, I think, is great. I think small regional banks are great. Just try to get away from these big banks. It's the big banks that are all systemically tied together. Stay away from the Wells Fargos, from the Bank of Americas, from the Citibank, from the Chase, and the small credit union and the small regional banks, to me, are a much better place to go. And if I had $1 million in a bank, I would open up 5 bank accounts, for $200,000 each under the FDIC limit in places like a local credit union or a small regional bank. I think you're better off than with a big bank that, if things get interesting, they're the ones that will be first on the chopping block. These are the banks with the big derivative portfolios. And certainly when the derivatives start to go bust, that's when things are going to get very, very frightening, because it will pull down banks that no one has any idea that there are problems coming, and bang, it will happen and pull them down. So I like that idea a lot.
This one is going to be right up your alley. Jake's Custom Parts says, ask Andy for a BRICS update.
Well, it's been slightly more quiet on the BRICS front lately. I will tell you that I was listening to Jim Willey, and Jim kind of blew my mind a little bit when he talked about the fact that the rumor is that Japan, who has been copiously selling U.S. treasuries, is thinking of joining the BRICS nations. That would be a knife in the neck of the West. I can tell you that there's talk of Hungary leaving the European Union. And Hungary is one of these banks that followed the German Bundesbank in 2017 by repatriating their gold. And they've been a big purchaser of gold. And they've fired a lot of their military generals and officers that are pro-NATO. And so there's anticipation and thought that Hungary will be joining this union. But look, the bottom line is simply this, is that the BRICS is not going away anytime soon, and they're going to have their own issues, but we are seeing a growing chorus of countries that are wanting to join the BRICS. And nothing that has been newsworthy other than what I'm mentioning here, as far as I'm concerned. I'm looking every day, I'm watching every day. But when you see our allies like Turkey, who continues to gobble up gold, we talk a lot about them buying gold the most in the world. In 2022, the trend continued in the January. They bought more gold than anyone in January, and they have already submitted their application or their intention for joining BRICS. And here again, you see Hungary fire all their pro-NATO military officers. What does that mean? To me, it means they're going to join that side. They're going to move towards BRICS. If you see Japan kind of give in and realize that this is where the opportunity lies, not with the West, who is going to be cut off, I think that would be the coup de grace, really, for the dollar. But just more of the same thing. These countries are accumulating commodities. They are building relationships. You have an increased commitment for cooperation between China and Russia. It's happening. And, the fact that the West is ignoring this is a very, very big mistake. And I think ultimately, when something goes wrong here in this country, it will be the time for these countries to really turn up the heat. Maybe it's when we see a problem with the COMEX market, which could very easily default or just stop delivering when we continue to see the amount of drawdowns in metal from the London Metals Exchange and the COMEX. If all of a sudden one of these Western institutions just says we're not going to allow deliveries anymore, or there's a major problem with the banks in the West, that's when, if I were pulling the strings on the other side of the table, I would turn up the heat considerably. Maybe that's when they roll out their currency, their new currency that's pegged to commodities. Maybe that's when the Moscow exchange turns up the heat and starts quoting gold and silver higher than the Western exchanges are. But other than Hungary, who is looking more and more like they're going to join, and Turkey continuing to accumulate huge amounts of gold, 23 tons they bought in January. And now Jim Willey saying that Japan has intentions of joining the BRICS. I can't substantiate it, but it really blew my mind when he said it. It just seems that all ships are pointed that way. And I think people need to prepare for that ultimately. And that's really what I've been talking about for the last 3 years, in that it's not going to be the Fed that's going to control things here with interest rates. It's going to be the rest of the world when it becomes very obvious that they don't need to hold dollars any longer simply to buy oil. And when you see Saudi Arabia in Davos 2 weeks ago saying we're open to taking other currencies, how much more do people need to see before they realize it's coming? And like almost everything else in this world, it never happens when or how we think, but you can see the chess pieces are slowly being moved into place across the board.
It's interesting. I just interviewed James Rawls, the founder of survivalblog.com. It'll be posting later this week. He talked again, reprising his theme that he's been focusing on for the last couple of years of we are living in the age of deception and betrayal. So people are looking hard to find out where can they find something that's real? Where can they find something that's true? And Boris Perez made a comment here. He says there's truth in the black market. I think that gets back to what you were talking about, that you can have institutions, whether it's governments or central banks or whatever, trying to maintain an artificial grip on free markets. But eventually, as they said in Jurassic Park, life finds a way. I mean, people find a way. Do you have any comments on that before we move on?
Yeah, I mean, you can kind of see that right now if you take a look at what the banks have done recently, commercial banks. It's incredible the amount of contracts that they sold. Just the other day, in silver, the commercial banks sold 10,755 COMEX silver contracts. That's 53.78 million ounces. Now, this is the commercial banks, and I think they are realizing they have been reluctant to add to their short positions, and that is a massive amount of short covering right there. So, you look at what they've done in gold over the same time. The recent, and I understand the commitment of traders reports are delayed, but the last one that came out because of this hack, last one that came out showed that the commercial banks covered 27,554 gold contracts, or 2.755 million ounces. And what I mean by that is that maybe they're realizing that to be on the short side of this market right now, when the world is moving towards it and accumulating it, is suicide. And that's exactly right. You can manipulate a market over a prolonged period of time when no one is interested in it, but to try and hold it back when it's moving directly at you to try to hold back the global tide. You can only successfully manipulate a market over a very long period of time by pushing it in the direction that it is going. And it's been easy to hold back gold and silver because it wasn't really going anywhere with any force or speed over the last 20 years, but it's changing and the world is realizing what real money is. And when you realize that there's only, on top of this, okay, one of the things that everyone's been talking about is the 7 million ounces that JP Morgan put into the market. Well, as far as I'm concerned, what that means is that they moved it from eligible to registered. And that means, I believe, that they have a short position. Someone is calling that short position and saying, we want delivery of 7 million ounces. And there is no other reason for them to have done this other than I believe it is going to be delivered out to whoever it is that is standing for delivery. But even still, you have 39 million ounces in the registered category, and the banks just covered 53.78 million ounces. So how does that happen? It's rehypothecation, it's short, it's suicide if the market moves against them. And what they have been doing, in my opinion, is all they can do to suppress the price and gobble up everything physical. If you look at a chart of what the LBMA has in silver, it's like 800,000 ounces, and that's it. It's fallen straight off a cliff, the amount of silver they have. And this is why they came out and said, if deliveries keep up at this pace, there'll be no silver left for delivery in 2023. This is why you can't continue to hold it back, and why, if you're on the wrong side of this trade, if you're short and there's a massive rush for delivery, it will be a religious experience for many of these banks and these funds that are short huge amounts of paper, gold, and silver, that there's not enough to back the delivery.
And a lot of our viewers have been watching that with interest on many different channels, and including on ours. And we're always glad to have guests here who can illuminate that for us, because that's where another place where reality asserts itself when it gets physical. Can you talk to us about physical metals that people who are watching this, or those who they want to forward this video to, can obtain on our weekly special this week?
Yeah, we're gonna, I bought as many of the 2022 silver maple leafs as I could buy, and we were fortunate enough to get a good quantity of them over the last few weeks, and they're $3.40 over spot again. These were $8 over spot just a few months ago, and the 2023 kangaroo from Australia, they're both the only 4.9 fine silver coins. And those are $3. I want to see, was it 29? I think
it's $3.39.
$3.39. Okay, $3.39 on the kangaroos, and those are cool because they come in boxes of 250. Everything else comes in boxes of 500. So a mini mint box, 10 rolls of tubes of 25, probably weighs about 18, 19 pounds. Easy to move around. Both of them in stock, ready to go, and again, sovereign coins, I haven't recommended them in 2 years. Everything I've ever been selling and telling people to buy, advising them, even as a US Mint reseller, has been bars, because the premiums were so much more attractive than the sovereign mint coins, which were just stupidly high. These are not very much above where they have been priced most of my career prior to all the craziness over the last 3 years. So again, I think this is a sweet spot where, it's just a good opportunity where prices have come down, premiums have come down. Everyone's waiting for this soft landing, and they continue to hold back the price. There's just been a little bit of a soft spot in the industry. So if you're looking to buy silver, I haven't bought any coins myself for the better part of 2 years. This is the first time I think coins are, over the last 2-3 weeks, reasonably priced where I don't have a problem recommending them over bars for the first time really since 2020.
Well, we're grateful for those weekly specials every week. It usually ignites quite a scramble among our viewers, and so we get a lot of pressure on those. So people be aware that inventory is limited, and when it's gone, it's gone. We have other products, but they won't be at these exact sale prices. And so that you don't miss any of the interviews with Andy or any of our guests, or the weekly specials, make sure you go to libertyandfinance.com, put in your name and your email address at libertyandfinance.com, click submit, make sure you acknowledge the confirming email and you're in. You'll get 1 email per day in your inbox with our latest guest and the weekly specials, so you won't miss out on either one of those. Andy, any parting thoughts for our viewers?
The one parting thought I'd like to mention is just a shout out to Representative Vito Barberi. I think I'm pronouncing that right, from Idaho. And I want to read to you what he said when they are introducing a bill to allow the reserves in Idaho to hold gold and silver as a portion of it. And again, all of these states that are moving to, like Missouri, like Kansas, like Wyoming, and others that are passing similar laws, like West Virginia, Mississippi, Maine, Tennessee, Montana. These these states are waking up. And I want to read you one thing that this gentleman, a representative, the Republican senator, I guess, from Idaho said. He said, "We need to give our treasurer the ability to consider doing what so many central banks around the world have been doing, which is acquiring gold. Gold and silver are also right there in our Constitution." So, you're getting an awareness by the states now. And this is kind of the fuse that I think I've always talked about, where there's an awakening amongst the American public, that holding dollars and not being a contrarian is the road to going broke. And I think if you hold everything in dollars and you're not a contrarian, you will go broke. I do believe that when this all plays out. And when you see a guy like this who is out there, just like Representative Mooney from West Virginia, who are out there saying this, and it ignites people's interest across the country. This is the kind of thing that when I've talked about, ultimately, I believe supply will be the issue in this industry more than anything else. That's the kind of fuse that could be lit. Because look, last year, stock portfolios were down 20%, the 10-year treasury down 16%. That's not the case right now, but what happens if it is the case by the end of the year, or much worse? What if there is that big sell-off that no one would be surprised, or there is that systemic problem with the banking system and everything starts to go upside down? These states are waking up their populace, hopefully, just like the central banks are doing, which, again, the biggest money is always closest to the information, waking them up to protecting themselves. And people who think that if you have a big fat bank account, you're safe, I got news for you. Not only is the dollar being destroyed right out from underneath you, but at the same time, we're being told by the FDIC that there are going to be bail-ins and bank runs. And if you don't wake up and listen to the importance of doing something about that, whether it be credit unions, several banks, precious metals, just getting that large amount of money out of the banks, I think you really, this is your kind of your last alarm bell. And it's one thing when Andy and Dunnigan says it, it's another thing when the FDIC says it. And then you start to see states talking about the erosion of purchasing power in inflated dollars. Maybe they see something a little more clearly than the rest of us do. So I take good amount of optimism for where we're going in this market when we start to see more and more stories. And this is the 5th or 6th one we've seen in the last couple of weeks. So we'll keep monitoring it. We'll monitor what's going on with the BRICS, and I'm sure there'll be plenty more to talk about next week. And I just appreciate the chance to chat with everyone. Wish it could be longer.
Thanks, everyone, for joining in on the super chat there with Andy and asking your live questions. Really appreciate that. You guys make this all possible. Andy, thanks as always for being us here with all of our viewers. What a family, what a group that are supporting each other and getting the word out, being aware and prepared here on Liberty and Finance. Thanks, Andy.
Absolutely. You all take care.